Welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street and the small business lenders who help it grow. John Riosti, live from Washington, D.C. area. John, as always, thank you so much. I know it's busy for you, and thank you for taking the time to talk to us and let us know the inside scoop of what's going on. Lance Sexton, of course, from Arkansas. Lance, you didn't make it to America East, but I understand you're planning on going to Mid-America, so you're going to be on the road a little bit.
I really wanted to be at America East, but with the direct portal open and all the activity we've got going with that, it was hard to break away. I'm hoping I will be at Mid-America. I'm scheduled to do a couple of sessions, so I'm very excited about being there.
Well, we got a ton of news, so let's get into it. Number one, let's go with the poll question. Have you refinanced, or are you refinancing, so it could be an application in process, a 7(a) loan with the 504 debt refi program?
This is new enough, Bob, that I don't expect the response to be an overwhelming.
Oh, I was getting close, 13%. Let's go through that. Why is this important, and why would a lender want to go through their portfolio and start cannibalizing and start doing a bunch of 504 refis?
Well, if you're talking about providing good customer service,
right, and
a great customer service, Bob, is someone that has a 7(a) loan on real estate that maybe it's at prime plus 2.5. Well, coming in and refinancing it with a 504 with the fixed rate component of the debenture issue is going to give them a blended interest rate of quite a bit lower than the 7(a) rate. It would provide improved cash flow for the small business. So it certainly is a great customer service tool for any financial institution doing SBA lending.
Great. And if it's that variable of a rate, you're going to lose it anyway. They are going to be refinancing. These loans have an average life of about 7 years. I'm talking the 7(a) loans before they're paid off or refinanced. So you might as well get back in. Lance, I'm going to rip that phone out of your...
Well, Bob, Delaney forgot to text me and tell me to turn off my ringer.
Under the bus. There you go.
I'm not throwing her under the bus. I'm just saying I forgot.
All right. Very good. Let's move on. Do you agree with the SBA's statement that it takes 60 seconds to make a forgiveness decision in the new portal?
I have a strong opinion on this, Bob.
Well, I'm going to let John go first because he's talked to a bunch of lenders, and let's see what you all say. All right, John, how's that stack up with the people you're talking to?
I would have probably leaned towards the yes, and I will say this: these figures are probably a little bit approximate, but it is fair to say it doesn't take long. That the new portal seems to be working very well. The lenders that are participating like it, and I guess the numbers that they released yesterday, they don't lie.
Right, John.
Obviously, if it weren't working, there wouldn't be as many loans.
John, address the issue again, and the reason I'm asking again, we've talked about it, but I'm still unclear. Why would someone want to use their own in-house portal that they've developed, or they're working with their vendors and not SBA's, John?
This is really, it's interesting to say, but it seems like, and I guess maybe I'm factoring out someone like, some of the very large banks with very sophisticated technology, but seems like SBA has a really good product. And it's as good as most banks, probably better than most banks. It works. And more importantly, I think the lenders, and I beg your pardon, the borrowers will want to use it.
Well, yeah, and I can understand. I'm the executive of the bank, and I made a 6-figure commitment to develop this, and now oh, we're going to do a 360 and we're going to throw that money down the, we're going to we're going to ignore that executive decision and we're going to go with SBAs. But as a sunk cost, gang, the money's been spent. Go with the better product. Lance, what's your
Well, Bob, I'm deep into the direct forgiveness portal, and I just want to tell you that it works. It works incredibly well. And John hit on an excellent point. Feedback from borrowers is that it's simpler. It's a very simple process, a very easy process for the borrowers. And they've really embraced it, and I can tell you that by the huge volume of forgiveness requests that have been submitted. So, I understand, Bob. I had a discussion with a bank that did not choose to go with direct portal, and there are two reasons where we invested money in our own forgiveness portal, and we don't want to confuse the customers even more by telling them there's a different way to do it. But honestly, most of these small business borrowers are picking up the newspaper and seeing that there's a direct forgiveness portal. And I suspect some of the people who are not participating are getting phone calls from borrowers saying, why are you not participating?
Yeah, and a lot of emails. Third poll question, and I'm going to go to John's reporting on this. Will SBA loan programs run out of funding for fiscal year 2021? This was a topic at America East. I thought they addressed it fairly head on. John, I don't know if this got back to you, if you heard what SBA said. Very good. Yeah. Joseph, you want to hop on and tell us what SBA said directly?
Yeah. Mr. Miller basically just said it shouldn't be a problem. They're tracking it daily, and it won't be a problem to run out of funds. That's simply what they said.
Very good. John,
just real quick on that is I wish I could have asked him, and I do want to talk to SBA about this, and I've asked to talk, but why? Meaning specifically. Is that because the administrator is prepared and planning to use her authority to expand the funding?
Did he address that, Joseph? He didn't address it, did he?
Just said they're tracking it daily and that it shouldn't be a problem. So
there you go.
They're the experts and they know best, but I'd like to know a little bit more as to why.
I agree with you, John. We asked the same question. Hey, John, is this your reporting on lenders are quick to adapt, SBA's faster PPP forgiveness? This American Banker. Was that you or is this someone else? Okay. Yes. Tell us what you wrote about and go ahead.
Well, it was very interesting, and it speaks to their, I guess the word is pride about this, because what I did, a little behind the scenes talk, is all I did was call and ask for some statistics. I mean, it just seemed, it was about, when I called, it was about just a little over a week, 7 full business days rather. And I was just interested to get a sense of what was going on. I had talked to some lenders about it, and 2 of the lenders said they were using it. One of them said they weren't, but they had a rationale, and they certainly said it wasn't because we don't think the product is good. But they were quick to get back to me and to offer an interview, and they talked at length about how it is functioning extremely smoothly. A few minutes for the borrower to complete his application, and a few days. They might have actually been overly conservative based on what Lance has said in their estimation of the time between submission of the loan by the borrower and receipt of the payment by the lender. They were talking 5 to 7 days, and I guess, Lance, your experience is even better.
It's not taking 5 to 7 days. I watch it on the dashboard. it's taking probably 3 days is my best estimate, 3 to 4 days. So they're doing it quicker than they're saying.
That's great. That's great. Hey, John, I'm a big fan of Patrick Kelly. I don't necessarily agree with everything he says, but I love his passion, and
Yes.
you can't argue with that. What was he telling you about the portal?
What he said, and it made really good sense, is that this was something, and this being forgiveness, the forgiveness issue, that they really wanted to get right and make the experience positive, both for the lender and the borrower, because they want to see both again, with regular SBA, with 7A, with 504. And if they don't get it right, if they were to take an inordinate amount of time to either approve the loan or distribute the money, obviously it's unlikely that they would see either. So what I was thinking, and as I was writing, and I tried to get a sense of this, is what a difference a year makes, because it was August of 2020 when they opened their portal, and all the talk then was, blanket forgiveness. These forms are too complicated.
You're right. You're right. Thank you for putting that into context. And SBA
Well,
did a wonderful job with that. Go ahead, Lance.
Guys, one of the most common phone calls I get during the day is I will get a borrower that calls up and says, my PPP loan number is this. And I put it in the portal, and I got an email that says it's complete. And I downloaded a letter that said my loan has been forgiven. What does that mean? I said, that means you're done. You're forgiven. It's over. And they're so excited and so happy, and it's fun to field some of those phone calls from borrowers that are not overwhelmed, but overly excited about what a simple process, and it's done. And I've got a forgiveness letter in my hand already provided by the portal, and they're just like, that's it? And I'm like, yeah, that's it.
SBA did such a great job in getting the first round out, which was absolutely needed. It's gratifying to see that they're also following up at the back end to minimize the paperwork and the angst for the borrower, that they can move on and how to deal with the future challenges that they are to keep their business survivable and keep their employees employed. So,
right.
Very good.
Well, guys, I've said this before, Bob, but they got this one right. They got it right.
And good for SBA. Good for SBA. John, is this a story that you're following, that there's been rumblings out there? New York Times reported it. University of Texas has a report that the fraudulent loans tend to be concentrated in the fintech lenders. New York Times is quoting up to 15%. Is there anything that, are you following that? Any comments on that?
Well, in a way, I am in sort of a more general way. I have that's been in the public realm for some time, and I know that the OIG, that's kind of what the OIG said. There have been several reports to that effect. And what we're working on right now is the reaction to the legislation.
Yes.
Does the legislation have any chance? Will SBA allow more, or let's just say, will the door be open for SBA to allow more non-bank, non-credit union, non-depository is, I guess, the better way to put it, lenders, non-really regulated lenders. And this now becomes, connected to that. Is will this, these reports, will it impact the efforts?
Well, we're definitely going to follow this, but I agree with you. I personally don't have a problem with opening up the gates and letting more lenders lend. I think that's good for all of us, as opposed to keeping it to a narrow slice. And I'm hoping. Go ahead, John.
And I apologize for talking over you, but where it adds complexity is if you're allowing more lenders into the same or similarly sized program, and let's just say roughly $30 billion, because, that's about where it's been. And I know this year is an unusual year, but then that could create more problems because they're running, this year they're going to be at probably 100% of that, even before they were at, say, 85, 90% of it. So, if you add even a relatively small number of very high-tech, high-volume fintechs, you're going to have to compensate somewhere,
Wow.
Well, I'm hoping the issues. Go ahead, Lance. Jump in.
One of the things I wanted to add, we have to think about the emphasis in 2021. It was for PPP loans to get out to underserved markets, and the traditional bank PPP lending wasn't necessarily getting into those markets, and the fintechs allowed PPP lending to get into underserved markets. Most banks were doing PPP loans for people who had accounts at the bank.
Right.
There are tons of small businesses that use various types of online accounts, and many of those businesses were not being reached. So there was a real push to hit those underserved markets, and I think the fintechs did a great job of helping them do that. And the other comment is I read the story from UT Austin. It was a lot of speculation and forecasting, but no actual data. So
right.
You have to take that into account too.
Right. That's why, Lance, thank you so much for bringing that up, because it's right now, as you can see from this article, anecdotes, and there's talking, but we're trying to put it all together, and we're all hearing the same numbers, but when you get down to the data, it doesn't necessarily support the screaming headline. Go ahead, Lance.
Well, here's an example, Bob. They basically indicated more than one loan at the same address indicated potential fraud. Well, what if there's a business park where 10 businesses are located and they all apply for the loan, and they're all going to have the same street address with a different suite number? Well, according to that study, it's potentially fraud. So again, I'm not going to say there's not fraud, because there is fraud in the PPP loan program, but a lot of that report, I read it and digested it, was forecasting, speculation, and that's important to note.
Right.
There's also one other non-fraudulent reason for, one address may have gotten the same multiple PPP loans, and that is people who were a little bit desperate filed more than one application, and that happened more than once. That two independent financial institutions approved the same loan, or approved loans to the same borrower, and the borrower didn't intend fraud, and they certainly didn't want to participate in fraud, and probably on the back end it's being cleaned up. So.
Yeah, the borrowers that got two loans from different institutions, say two first draw loans, one of those banks will not have an SBA guarantee on their loan.
Right.
That's true. Very good. Hey, Lance, we had a great webinar yesterday on global cash flow for the SBA. And Lance, I sure enjoyed working with you on that one. Next week, we're going to be doing one on the underwriting credit memo over 350. It is definitely different than a conventional credit memo. We'll be focusing on those differences. We are still under the COVID regulations, so we'll be talking about that, what you need to address. And we want to make sure those credit memos are compliant, because what's the first thing the Inspector General and the auditors look at, Lance, when they walk into doing a review of your loan portfolio?
Well, they're going to want to see the credit memo and make sure that it matches up with the authorization, and make sure it matches up with the disbursements that are made. So the credit memo is the cornerstone. Get the credit memo right, and the review is going to go better.
Hey, John, thank you so much for your time. I appreciate it. We're going to miss the dog days of summer with all this news hitting down. We didn't even talk about what's going on legislatively. But I know that's up in the air now with Afghanistan and with infrastructure, and so if Main Street's going to be is going to get something on that. But the House is in recess, correct?
House is in recess. There's no, I just looked at that yesterday. There's nothing on the calendar. So for August, obviously there'll be quite a bit in September, but
September, we're going to rock and roll. Lance, thank you so much for your time. We got a question on what happened to Delaney. Delaney's here, but she's in school, so we're working out her schedule. Delaney hasn't gone anywhere. She's still with us.
Yeah, I'm still here, everybody.
Oh, there you are. Got a voice. Well, we're late. So Delaney, tell us what your updates. You're back in school. What are you doing?
Yeah, I'm just working on class, and we're trying to work the schedule out because I do still want to be a part of Coleman Report Live. I love being a part of it. So me and Bob will figure it out. That's for sure.
Okay. All right. Well, very good. How's that, John? I said Delaney's still here, and we delivered. Hey, thank you all for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time. Thanks a lot.
Have a great day.